ನಮಸ್ಕಾರ ವೀಕ್ಷಕರೇ, ನಾನು ನಿಮ್ಮ ರಕ್ಷಿತ್ ರಾಜ್. Let us move with the further problem. Capital assets which is contributed for firm or association of person as a capital. So ಇಲ್ಲಿ ನಾವು capital assets converted as stock in trade, two problems and one assignment ಆಗಿತ್ತು. Next sum is capital assets which is contributed for firm or association of person. Problem number 6. So here the problem says Mr. Wright transferred unlimited shares of a company on 1/1/2019 as his capital contribution to the firm. The fair market value of the unlisted shares rupees 35 lakhs, but the firm record the value of unlisted shares as rupees 28 lakhs. The unlisted shares were acquired by Mr. Wright on 1/1/2006 of rupees 10 lakhs. Calculate as taxable capital gain for the assessment year 2019-20. So ಏನು ಹೇಳ್ತಿದ್ದಾರೆ? Previous year is 2018-19, assessment year 19-20. Assessee is Mr. Wright and the asset is held by him as unlisted shares and type of asset is special category of assets, and period of holding says from 1/1/2006 to 1/1/2019. So it is more than 24 months. So as it is more than 24 months, it is treated as long-term capital gains. So calculation of taxable long-term capital gains. Here the sale consideration says rupees 28 lakhs. So ನಿಮಗೆ ಪ್ರಾಬ್ಲಮ್ ಅಲ್ಲಿ ಎರಡು ಸೇಲ್ ಕನ್ಸಿಡರೇಷನ್ ಕೊಟ್ಟಿದ್ದಾರೆ. ಒಂದು actual sale consideration, that is 35 lakhs, and the company's book value. So ಇಲ್ಲಿ ನಾವು ಎರಡು ವ್ಯಾಲ್ಯೂ ಕೊಟ್ಟಾಗ the firm ಏನು ರೆಕಾರ್ಡ್ ಮಾಡಿದೆ that will be treated as actual sales consideration. Okay, the book value as on 1/1/2019 is 28 lakhs, treated as sale consideration, less transfer expenses, it is nil. So the value, same value will be carried forward as net sale consideration, less index cost of acquisition. Because it is long term, we are going to deduct as index cost of acquisition. So formula for index cost of acquisition is actual cost divided by CII purchase into CII sold here. So ಇಲ್ಲಿ ನಾವು ಬಿಫೋರ್ 1/4/2001 ಗಿಂತ ಪರ್ಚೇಸ್ ಮಾಡಿದ್ರೆ ಆಕ್ಚುಯಲ್ ಕಾಸ್ಟ್ ಆರ್ ಫೇರ್ ಮಾರ್ಕೆಟ್ ವ್ಯಾಲ್ಯೂ ಆಸ್ ಆನ್ ಅಂತ ತಗೊಂಡಿದ್ವಿ ಲಾಸ್ಟ್ ಸಮ್ ಅಲ್ಲಿ. ಬಟ್ ಇನ್ ದಿಸ್ ಸಮ್ ಇಟ್ ಈಸ್ ಪರ್ಚೇಸ್ಡ್ ಆಫ್ಟರ್ 1/4/2001. ಸೊ ಅದಕ್ಕೆ ನಾವು ಡೈರೆಕ್ಟ್ಲಿ ಆಕ್ಚುಯಲ್ ಕಾಸ್ಟ್ ಅಷ್ಟೇ ತಗೊಂತಾ ಇದೀವಿ. ಸೊ ಆಕ್ಚುಯಲ್ ಕಾಸ್ಟ್ is 10 lakhs divided by CII purchased in the year 2005-6. So ಇಲ್ಲಿ 1/6 ಅಂತ ಬರುತ್ತೆ. So ಮಾರ್ಚ್ ನ ಎಂಡ್ ಆಗಿಲ್ಲ. So that is why it is treated as 2005-2006. So CII purchased in the 2005 and 6 is 170, and CII sold is in the year 2018-19 is 280. So 10 lakhs divided by 117 into 280 will be 23,93,162. Okay, next, less index cost of improvement, as there is no improvement cost, so it is nil. So again 23,93,162 will be carry forward and shown in the negative value, and gross long term capital gain will be 4,06,838, and less exemptions, there is no exemption, so taxable long term capital gain is 4,06,838. Okay, next topic is compulsory acquisition of capital asset. So here the capital asset is transferred or compulsorily acquired by the government. So in this process, if any profits occurred by this compulsory acquisition, then it is taxable under income from capital gain. Okay, let us start with the problem, that is problem number 7. So here Miss Patil purchased a land on 1/1/1992 for rupees 1 lakh. The said land is compulsorily acquired by the government on 1/1/2007, and original compensation awarded is rupees 3 lakh. The said compensation is received by the assessee on 1/1/2019. The assessee filed a suit for additional compensation in the High Court on 25/3/2019, and the High Court on 25/4/2019 awards an additional compensation of rupees 10 lakh. The High Court directs the government to pay rupees 10 lakh as the assessee to the assessee by 28/4/2019, and the government pays of rupees 10 lakh on 28/4/2019. Computer taxable gain for previous year 2018-19. So ಏನು ಹೇಳ್ತಿದ್ದಾರೆ, she has some land which is purchased on 1/1/1992 for rupees 1 lakh. So ಯಾವಾಗ ಪರ್ಚೇಸ್ ಮಾಡ್ತಿದ್ದಾರೆ, 1/1/92 ಅಲ್ಲಿ ಪರ್ಚೇಸ್ ಮಾಡ್ತಿದ್ದಾರೆ for rupees 1 lakh. The said land is compulsorily acquired by the government on 1/1/2007. ಯಾವಾಗ ಅಕ್ವೈರ್ ಆಗ್ತದೆ, on 1/1/2007 by the government, and original compensation awarded is rupees 3 lakh. So 1 lakh is the cost of acquisition and rupees 3 lakh is the sale consideration. Next, the said compensation is received by the assessee on 1/1/2019. Though transfer or compulsory acquisition is happened in 2007, but she has been awarded or she has been given the compensation in the year 2019-20. So it is taxable in the year 2019-20, and the assessee filed a suit for additional compensation in the High Court. So this is one part, and second part is she has been claimed for additional compensation in the High Court, and the High Court says yes, the government should pay rupees 10 lakhs as an additional compensation, and the government pays the additional compensation in 28/4/2019. So 28/4/2019, it is not a previous year. ಅದನ್ನ ನಾವು next year ಟ್ಯಾಕ್ಸ್ ಕ್ಯಾಲ್ಕುಲೇಷನ್ ಅಲ್ಲಿ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡ್ತೀವಿ. ಸೊ ಈ ಸೆಕೆಂಡ್ ಪಾರ್ಟ್ ನ ನೀವು ಇಗ್ನೋರ್ ಮಾಡಿ, ಓನ್ಲಿ ಫಸ್ಟ್ ಪಾರ್ಟ್ ಮೇಲೆ ಅಟೆನ್ಷನ್ ಕೊಡಿ. Okay, here the previous year 2018-19, assessment year 2019-20, assess is Miss Patil, and the asset she owned is land. The type of asset is immovable property, so it is treated as special category of asset. So holding capacity will be 24 months. From 1992 to 2007, it is more than 24 months, so it is treated as long-term capital assets or long-term capital asset. So calculation of taxable long-term capital gain, sale consideration, as I told, the government has been issued a 3 lakh as a compensation, so it is treated as sale consideration. Less transfer expenses, there is no less transfer expenses. Next, same amount will be carried forward as net sale consideration, and less as it is long-term index cost of acquisition. So before 2001 either purchased is before 2001, so it is treated as actual cost of fair market value as on 1/4/2001. So here whichever is higher will be treated as cost of acquisition. So actual cost on 1/1/1992 is 1 lakh, and fair market value as on 1/4/2001 is not been given, so it is nil. So whichever is higher is 1 lakh, we are going to consider as 1 lakh as a cost of acquisition. Next, divided by CII purchase as it is before 1/4/2001. So we are taking only base year as a CII purchase, that is 100, into CII sold. CII sold in 2007. So CII sold will be 122. So 1 lakh divided by 100 into 122 is 1,22,000. Again, there is no cost of improvement, so nil. So the value will considered as 1,22,000, shown in negative value, shown in the brackets because it is deductible value. Next, after deducting 1,22,000 out of 3 lakh, the remaining balance is 1,78,000 called as gross long-term capital gain. Again, there is no exemption, so same amount is carried forward and treated as taxable long-term capital gain. Next topic is sale of debentures. So from sale of debenture in problem number 9, let us know Mr. Chalukya purchases listed debentures of Swastik Limited on 10/3/2014 for rupees 40,000. Mr. Chalukya dies on 3/4/2016, and as per the will, debentures of Swastik Limited are transferred to his son Chandru. So ಏನು ಹೇಳ್ತಿದ್ದಾರೆ, Miss Chalukya purchased some listed debentures from Swastik Limited and on 10/3/2014 for rupees 40,000, and he dies, and his asset is being transferred as per his will for his son Chandru, and on 1/3/2019 Mr. Chandru, so ali Chalukya anta ಇದೆ, ಅದನ್ನ Chandru ಅಂತ ಮಾಡ್ಕೊಳ್ಳಿ. So it is Mr. Chandru sells debentures of Swastik Limited for rupees 98,000. Expenses on transfer is rupees 2,000. Find out the taxable capital gains for the previous year 2018-19. So here the assessee is not Chalukya, the assessee is Chandru. So the person who is selling the asset is Chandru. So let us know previous year 18-19, assessment year 19-20, and Mr. Chandru is the assessee, and asset is listed debentures. Type of asset is financial. Any asset which is listed is financial asset, and holding period will be 12 months. So ಯಾವಾಗ ಪರ್ಚೇಸ್ ಆಗಿದೆ ಇದು ಟ್ರಾನ್ಸ್ಫರ್ ಆಗಿರೋದು ಯಾವಾಗ 3/4/2016 on the death of his father. ಬಟ್ ಇಲ್ಲಿ ನಾವು ವ್ಯಾಲ್ಯೂ ಕನ್ಸಿಡರ್ ಮಾಡ್ಬೇಕಂದ್ರೆ ವಿಲ್ ಆಗ್ಲಿ ಗಿಫ್ಟ್ ಆಗ್ಲಿ ಟ್ರಸ್ಟ್ ಆಗ್ಲಿ ಯಾವಾಗ ಟ್ರಾನ್ಸ್ಫರ್ ಆಗಿದೆ ಆ ಡೇಟ್ ನ ಕನ್ಸಿಡರ್ ಮಾಡಲ್ಲ. ಪ್ರೀವಿಯಸ್ ಓನರ್ ಯಾವಾಗ ಅಸೆಟ್ ಪರ್ಚೇಸ್ ಮಾಡಿದ್ದಾರೆ, ಅಕ್ವೈರ್ ಮಾಡಿದ್ದಾರೆ, ಸೊ ಆ ವ್ಯಾಲ್ಯೂ ಏನಿದೆ, ಆ ಡೇಟ್ ಏನಿದೆ, ನಾವು ಅದನ್ನ ಮಾತ್ರ ಆಸ್ ಪರ್ ದಿ ಪ್ರೀವಿಯಸ್ ಓನರ್ ವಿ ಆರ್ ಗೋಯಿಂಗ್ ಟು ಕನ್ಸಿಡರ್ ಇನ್ ದಿ ಕೇಸ್ ಆಫ್ ಗಿಫ್ಟ್, will or trust. So ಇಲ್ಲಿ will ಇಂದ ಬಂದಿದೆ, so we are going to take the date of previous owner originally acquired. ಯಾವಾಗ originally acquire ಮಾಡಿದ್ದಾರೆ 10/3/2014, 10/3/2014, and it is been sold by the Chandru on 1/3/2019. So from this date to this date it is more than 12 months, so it is treated as long term capital gains. So calculation of taxable long term capital gain. So particulars to amount column, sale consideration is 98,000. So on 1/3/2019 is selling the debentures, listed debentures on of rupees 98,000, and transfer expenses is there. It is nothing but here it is being told as selling expenses is one of the transfer expenses is rupees 2,000, and the balance will be 96,000 treated as net sale consideration less index cost of acquisition. So when we are going to calculate the debentures, we are not going to use the formula for index cost of acquisition. Whatever the amount is given will be taken directly. Okay, so index cost of acquisition is 40,000, no formula is applied, and index cost of improvement, there is no improvement in the cost in the asset, so it is nil. So 40,000 will be deducted from 96,000, so balance will be 56,000 treated as gross long term capital gain, and less exemptions, there is no exemption, so taxable long term capital gain will be remain same as 56,000. Okay, next problem number 10, take it as assignment from the topic sale of debentures. So ಇಲ್ಲಿ ನಿಮಗೆ sale of debentures ಮುಗಿಯುತ್ತೆ. Next sums will be carried on this topics. Under the topic transfer of depreciable asset, we have two problems, that is problem number 11 and 12. So 11 and ಮಾಡಿಸ್ತೀನಿ, and 12 take it as assignment. So problem number 11 says that from the particulars given by Mr. Shastri, a resident, find out the taxable capital gain for previous year 2018-19. The columns which are given in the table is name of asset, date of purchase, cost, date of sale, sale price, expenses on sale. So here name of asset are, there are two types of asset, one is government securities and furniture with the written down value of rupees 4,000 as on 1/4/2018, and the government securities is the first asset which is purchased on 1/10/2017 for the cost of 10,000, and date of sale is 30/6/2018. The sale price is 15,000, and the expenses on the sale is 200, and the furniture with the depreciation, the date of purchase of the furniture is 15/2/1992, and cost is 5,000, and the date of sale is 22/2019, and sale price is 3,000, and there is no expenses on the sales. So we have to calculate the two types of assets in order to find out the capital gains, whether it is short term or long term. So ee tara iddaga previous year is 2018-19, assessment year 2019-20, and assessee is Mr. Shastri. Calculation of taxable capital gain. So ಇಲ್ಲಿ asset, type of asset, holding period will not be calculated as a whole. So ಇಲ್ಲಿ ನಾವು individual ಆಗಿ ಮಾಡ್ಕೊಂಡು ಹೋಗ್ತೀವಿ in same format or in same table. So ಇಲ್ಲಿ calculation of taxable capital gain particulars to amount columns. First item is holding period on 1/10/2017 for the first asset. We are going to calculate the capital gain for the first asset, that is government securities. The holding period is 1/10/2017 and 36/2018 is the sold date. So between these it is less than 12 months. As government securities is a listed item, it is treated as financial asset. So because of 12 months, less than or equal to 12 months, it is treated as short term capital asset. So this asset will gain some profit, means then that will be treated as short term capital gains. Okay, sale consideration of government securities is been given 50,000, whereas transfer or selling expenses is 200. So when we deduct that from 15,000, the balance will be 14,800, which is said net sale consideration, and less cost of acquisition. As it is short term capital gain, we are going to treat it as cost of acquisition. So cost of acquisition is 10,000. We are going to take it directly, and cost of improvement is, there is no improvement, nil. So we are going to take 10,000 in the outer column and showing it in a bracket. So 14,800 minus 10,000 is 4,800, and which is called as gross short term capital gain, and there is no exemptions, so it is nil. So balance item is called as taxable short term capital gain, 4,800. Okay. Next, second asset is furniture. So here holding period is nil. So though the dates are given, we are not going to calculate the holding period because they are depreciable assets. So depreciable assets is always rated as short term capital assets. So that's why we are not going to calculate the holding period. So here sale consideration of furniture, always short term capital asset. So value is 3,000, which is given in the sum, and less transfer expenses. There is no transfer or selling expenses, so nil. So same balance is treated as net sale consideration, and from that we are going to deduct cost of acquisition. Here in this format or in this sum, in depreciable calculation, we are going to calculate cost of acquisition equals any written down value as given in the sum. So the written down value ಏನು ಕೊಡ್ತಾರೆ ಅದನ್ನೇ ನಾವು cost of acquisition ಅಂತ ಟ್ರೀಟ್ ಮಾಡ್ತೀವಿ in depreciable problems, depreciable asset problems. Okay, so here cost of acquisition written down value as on 1/4/2018 is 4,000, which is given in the sum, and less cost of improvement. There is no improvement in the problem, so it is nil. So we are going to take the total 4,000 in the outer column and showing it in a bracket. So then short term capital loss is 1,000. So this will be indicated in the negative form because there is a 3,000 sale consideration, but the expenses is 4,000. So 1,000 is in the negative value, that is treated as loss. So it is treated as short term capital loss, and we should not name it as taxable short term capital loss because it is not taxable. The problem number 12 is in the same case, so you can take it as a assignment. Okay, so problem 12 is an assignment. So transfer of depreciable asset is over. Next we have forfeited of advance money, transfer of selling self generated assets, transfer of bonus shares, and capital gains in case of non-resident. So again there are few problems on based on these topics. So we will discuss in the next sessions.